Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar still remains determined to take the challenge to the upside of 80 cents amidst to a weaker greenback, but apparently the market still doesn't have the momentum to drive to fresh highs after the market peaked at 79.74 overnight, which is the highest level seen back in September 2017. From a technical point, I'm still viewing that the market is overbought, and also from the 2 points here is bearish divergence. Therefore, I do expect to see a bull trap being placed as the market climbs either above 70 today or towards 80.15. Therefore, we should see a firm rejection from there. Well, overnight, the market in the euro did attempt to take the prices lower, and from the whipsaw manner price, the market has ended in a long-legged doji, as you can see here. Now, a long-legged doji is a type of candlestick formation where the opening and close prices are nearly equal despite a lot of price movement in between the day trade. This candlestick is often used to signal indecision about the future direction. So therefore, we've got a bit of divergence here when it comes to bearish. Could actually now be noting that we have seen a potential top around 122.85.95. Therefore, we could be looking back towards the downside with the support seen at 121.60.70. Well, dollar yen has been slightly to the bear case still, and it challenges the downside with the support seen at 110.20, sorry, and the base is now 109.65. I still view from a technical point we could ease towards that level, but look at the RSI, we are very low. Therefore, we could see a rebound from the region of 109.65 back to the top side around 110.90. The pound didn't stage any significant moves, and also with a slight doji in there, it is a little bit of indecisiveness when it comes to taking the rally on further. But the resistance still seems to be capped around 138.65.75. The market is still likely to remain on a slightly bid tone, purely for the fact is that they're still looking for a potential rate hike when the Bank of England meets in February. But at the moment, the trend is still holding around 134.95.05, which is still quite a way. But also, again, bearish divergence does suggest we could see another round of weakness. Well, since the gold rejects the 1,345 level, which is a 4-month high, it now suggests that we could see a slight pullback. We did get one overnight slightly. It did fall to a low of 31, but there is some divergence here, and also there's no trend anymore since this bull trend, with the ADX now being negated as it hit 70. And I believe the market has found a cap for this moment at 1,345. Therefore, I am looking for a move down to 35, and this could see a challenge towards 29. But overall, the broader picture is still bullish. Finally, we got oil falling away from the highs, and with profit taking seem to be emerging after thin trading following the Martin Luther King holiday on Monday, looks towards the support of 63.40. This could actually fall lower, and I'm looking for a move towards 62.60 and reassess from there. So that wraps up for today. Thank you very much for joining me, and I hope you have a great day that's ahead of you.